Hello, I'm James Marsh. I'm Managing Director of Andromeda Metals, and we have an exciting new project in South Australia. We are an emerging producer of halloysite kaolin, and we intend to be the world's leader in this sector.
Well, hello, James. Long time no speak. How are you?
Yes, very good. That's Matthew. Yeah, it's been a few months, but a very hectic few months, and we have progressed greatly since our last talk. So happy to talk about that with you.
Beautiful. Okay, so for everyone new to this story, we'll put a link below to the previous conversations with James, so you can get into the business plan, strategy, team, and what's led up to this point. But today we're going to focus on what you've done since November, which is when we last spoke. So you've been hard at it. Your share price is a little bit higher than when we last spoke, but you've been on a bit of a ride there.
Yes, we went on a very good ride, actually. A very strong ride, in fact, and it was on the back of some good news coming out. We progressed our plant designs. Our binding offtake came through, our first binding offtake. We expanded our resources and upgraded our resources. So, yeah, a lot of good news came through there, and on a bit of a ride. We have dipped since then, and some of it is due to the fact that pre-production, there's always a bit of a dip pre-production. People anticipate that. But the fundamentals of the business remain strong, and in fact improved even more, so even stronger now. So nothing has changed in that respect, and we're kicking new goals all the time.
Beautiful. But you are being shorted.
Yeah, that's going on. Unfortunate part of the market activity, and we're trying to block that out, to try and treat that as white noise, and just go on and push forward and get the things done we need to get done. And the market will, in the end, recover itself, and the value will reflect itself. And as we get forward to production, that we'll leave that far behind us.
So, who are the new investors since we've last spoken? I mean, have you moved a little bit more into the institutional side? Because I noticed a conversation about an index, being on an index now.
Not really. No, we still well over 11,000 retail shareholders. And we are now looking more towards institutional side of things. Now we have a major binding offtake which underwrites the business. It's significantly de-risked, and it's got to a point where it's de-risked enough for those institutions to get very interested. So that's our next phase of our growth in the share register.
So just on the shorting, I know you want to. It's not much companies can do, and you kind of want to look over your shoulder at it occasionally, so see what's going on. Is it a lot of shorting? Where do you think it's coming from? And I know you're going to say there's not much you can do about it, but is there anything you can do about it?
Doesn't seem to be. No, we did make some investigations to find out where the shares were being, who was lending them out. We really couldn't find out. It was impossible to find out. It seems like we were heading towards our first index in March, and some institutions jumped in quickly and in advance of that. On the expectation we'd make that index, that pushed the price up, so it went over where it should have been. I think the shorters latched onto that fact. When our market cap went past our NPV that we had out, then they moved in, and just unfortunate that there's a lot of misinformation going out there now. It's spooking a lot of other shareholders. It shouldn't do it, because it is misinformation. There's a lot of nonsense. It doesn't reflect what we're doing. The fact that we're actually still moving forward, still doing well, and there's nothing negative at all happening from a company perspective. It's just some unscrupulous people in the marketplace, unfortunately.
So, I mean, you've just done 100% offtake with a Chinese partner, which is, well, you can't do better than that, 100%, right? So that should give the market confidence, but people seem to be nervous about your ability to go and raise money, because you're going to need to raise some money for the short term. I know you've got some cash in the bank, but you're going to need to raise a little bit more, just top up the coffers. What's your sense of the market reaction to that? Should they be nervous about that?
No, I mean, the market, that binding offtake agreement was very hard work. In the end, it took 3 months of intense negotiations. We had it's a 30-page legally binding contract, and this is very significant. And it's with a major trading house in China, genuine company, very professional people. They trade in minerals from Australia, other minerals from major companies in Australia and from around the world. And it's backed by their financier, who is an even bigger company, a $1 billion company, who is underwriting all of the finances for this business. So they have exclusivity for the paint industry for our product. So we have a paint product. This is an extremely high quality paint product. We think it's one of the highest quality paint products in the world. This is very interesting because at the moment, other paint ingredients, which includes titania, the prices are shooting up. gone up 30% this year alone, and our product will allow reduction of that. So they are very keen to get this into the market. There is a true global demand for this type of product, though, so we're now looking at other offtakes around the rest of the world. But that's in addition to the offtake we already had. Since we last spoke, we got an offtake with a Japanese company for our ceramic product as well. And again, that's a very premium grade ceramic halloysite kaolin. Very rare in the world that people have the grade that we have. So we've now got offtakes in 2 very premium sectors of the kaolin industry, and legally binding ones as well.
Okay, so let me sort of understand that. So the Chinese trader has got 100% of the offtake for what? And the
for
Japanese
the paint product?
Right, for the paint product only.
Yeah.
Okay. And the Japanese have got what?
So they've signed up for 5,000 tons a year of the ceramic grade material. Now that ceramic grade is for porcelain production. So the Chinese offtake partners are now investigating that market as well, because half of the world's porcelain is produced in China. That is actually growing quite rapidly. There's especially in the technical porcelain sector, which is porcelain that goes into insulation for the electrical infrastructure, because that is being expanded dramatically in China, and all those ceramic insulators need the high quality halloysite kaolin that we have. So we're pushing that in China, but we also got interest from around the world. We got interest from around throughout Europe, Middle East, and the rest of Asia. We only now have 30,000 tons of capacity left to sign up. So my job is now to get that final 30,000 signed up through companies around the whole world. And as it stands at the moment, there will be people fighting for that product.
That's on the porcelain, right?
That's on the porcelain. So we don't want to make too much of the paint. No, we want to split that between paint and ceramic to de-risk the project.
Got it. Okay, that makes sense. Just wanted to be clear in my head where you were going. So back to the question about funding. There's a belief that you need to raise some money, and obviously have the share price having dropped off. People are looking at that and going, "Oh, we should have raised money when it was higher. We're going to have to raise money now. It's dilusory, etc." So, 1, do you need to raise money? And 2, how much?
Yeah, we will do it. There's no doubt about that. No, we're sitting on about $6 million now. Now that would take us through to finish our definitive feasibility study, but we don't want to run down that low. And we're factoring in. We don't want to delay our operational start. So there are some long lead items for the plant. So deposits will be required for that. So we're now making some serious studies on how much we'll need and when, so we can progress that. So it means that there's no delay to our start timeline for our project, which is the crucial thing we're looking at.
Right, but you must give some idea or sense of the scale of that, because you know what the lead items are going to be. You don't want to run it down too close, to the FID. So are we talking 5 million or are we talking 20 million? What sort of end of the scale?
Well, those numbers haven't come out of our DFS yet. They're being put to the DFS. Now, we made a recent change from just being a ceramic grade producer to being a ceramic and paint grade producer. That has caused a few changes in the metallurgical flow sheet. So the equipment will be tweaked. We don't know exactly what that number will be. It'll be in the order of a few million, possibly. It depends on how much percentage that these manufacturers want and how soon they want it. And it'll be in probably 2 or 3 or maybe 4 tranches. So, and it'll be over several months of period. So the initial amount might be a few million. We're not sure yet. And that's going to be within the next second half this year at some point.
Okay, so are we talking about one deal where it's an at the market and then you draw down over the next few months, or are you talking about having to do 4 separate transactions as you understand the numbers better?
Yes, it's looking like there'll be a deposit, could be between 10% to 30% in that region for the equipment on order. And then as you progress it through and until the point, and the last one on the on delivery and commissioning. So that's typical. And but those quotes, we're doing that to DFS standards. So we're doing it to a very high level of accuracy. Getting 3 quotes on everything takes some time, but that's well in progress. And we're doing it to AusAMM, standards, which are very high.
Okay, so your DFS you're tweaking now. You're going to start smaller and then build up. Have I read that right?
Yeah, that's right. So in our pre-feasibility study, we were going to ship 500,000 tons of ore over to China, probably, where it will be toll processed, and then when we sell the final product into the market. Now, what we decided was that we're far better capturing the value ourselves by doing the refining at site. We have enough water to do that. We've found that the water supply is adequate. We've got a plant that can do that. And what that does is that means that we don't give away margin to the toll processing company. We also don't have to ship 50% of waste, which is sand waste. We only ship final product. So there's clear logistics savings, clear processing savings, and also we will keep control of the product because we're aiming at 2 extremely premium grade materials. We want to make sure we have full control. We'll have a state-of-the-art modern plant that can make this material consistently at the right quality required. So it's going to be 250,000 ton feed rate initially, and then after year 2, we're doubling up in year 2. So it gives us a chance to sell out the whole of the first 2 years of production completely 100%, which means we'll have a very healthy business. And then once that's built up, we get a reputation in the market. Word gets around pretty quickly, and then people will really want our product. So then we can expand, double that capacity, and push it out to a 500,000 ton feed rate.
Okay, I get the caution about not spending too much money, because this project was always about scale. You've got a massive deposit. You had scale. We always talked about how big this thing was. So you just reining it back in and capturing more of the margins is eminently sensible. But is part of that because there are new entrants coming into the marketplace as well?
No, there's actually no one else coming in. There's actually people exiting the marketplace. Now, there's now 2 and maybe 3 of the world's biggest producers of equivalent grades are either run out of material or stop producing. So the gap in the market is opening up bigger and bigger. So we haven't got that. But what we can do is by limiting our initial 2 years to what will be maybe 120,000 tons of total capacities, we can create some nice competitive tension in the market. We can maintain those high prices. And then when we're ready to double up that offtake, double up the production and the offtakes, then we can make sure we actually capture the full value for that, and we maintain at a very high price in the market.
So what did the previous DFS say about the capex requirement? Because obviously what we're saying is going to be less than that. So what was the number previously?
Yes, initially we were looking at 28 million capex, and then the plant was going to be funded by cash flow from the DSO business. Now we still have got DSO options, so we could still do DSO. We could still get a very nice cash flow from that, and it's something we're looking at. So as soon as we open the ground up and start pulling material out of the ground, we can still ship. We've got a partner in China who wants to process that material, can process it very well. We've done a 50-ton trial just recently that gave great results. But at the moment, that's not in the DFS, but we are considering it. So at the moment, the capex is going to be higher because we're going to bring that plant forward now. Instead of being from year 3 from cash flow, it's going to be right up front, and we've got to fund that. But at the moment, in numbers, they're still a bit rubbery, but we're looking at around about 100 million will be where we are for the whole plant installed and all the infrastructure required to produce that material.
Right. And you've obviously had a starting conversation. I know you've got to get the numbers nailed down, but it's got a lot of subject to in there. But the market understands, your product understands the route to market, i.e. your ability to sell, and obviously these binding agreements help with that. So are you feeling confident about being able to raise $100 million?
Yep. So we are confident, and we are working very hard also to get some debt funding there. So we are working with advisors who are experienced in debt funding for non-conventional resources, which is very important because now we have this material that's an opaque market for this material. So we need specialists. So we've got specialists working on that, and they're extremely confident that we will get a large proportion of what we need from debt funding because now we have binding offtakes underwriting the business completely. It means that we are significantly de-risked, and the capex is still very small. For our NPV was well over $700 million. It's likely to be bigger with the DFS, despite bringing the capex forward now. So the NPV is not going to get worse; it's going to get better and better. So we think we're going to get a good proportion of debt funding, and then the balance. The balance may be we don't know what that'll be. It could be 20, 30 million that we might have to raise afterwards. But with our market cap, even at 400 million like we are now, that's going to be no issue.
Right. I mean, it's an interesting point you raised with regards to the unconventional nature of the material which you're talking about, because people don't understand it, and it is an opaque market. There are others. Does that make the potential equity component, the debt component, more expensive?
Possibly more expensive, yeah, because if we have to go to the non-mainstream banks, it may be more expensive, but the payback time is very short. So we're looking at maybe 3 years payback. So and that's without factoring in potential DSO, which will give us some excellent cash flow. So with a short payback time, we don't feel that's a problem. Now, the fact that we've got such high value, Kaelin, compared to virtually all other players in the world, means that we've got something that is highly desirable in the market. And so we've got independent technical consultants looking at it from the banking perspective, and independent marketing consultants to be engaged who are also going to look at that as well. And they will make sure that all that due diligence is done very, very thoroughly for the banks, and we're confident that there's nothing there that's going to block it.
Have you talked to your Chinese partner about getting Chinese debt in there? It's very cheap.
Yeah, so that is definitely a potential, because this, the big group that's financing the business, this $1 billion company, they could well be interested in. They use their own bank as well, and it's going to be done by letters of credit. So the actual payments will be letters of credit open with a bank, and it'll be a Chinese bank. So yeah, we are going to go to the 4 major Chinese banks because they would like to get involved if there's Chinese business at the end of it. But also, likewise, the Japanese business means that the Japanese banks are also interested. So we've got some good potential in both those areas.
Okay, so on financing, people should be less concerned than they appear to be at the moment. You think that you're on it, there's interest, and some cheap options if you can get some Asian financing.
Yeah, definitely. I mean, the funding we need for a project with our numbers is actually very, very small, in the scheme of things. And the potential revenue we'll have coming in, the actual margins we're going to get are going to be excellent. If you run for a comparison, if you run our material compared to gold, for example, then we would have the equivalent of 5 grams of gold in the ground. So people around the world, we wanting to throw as much money as possible at that sort of project. In our case, we want far less money than a gold project, and yet we've got that sort of equivalence of value in the ground.
Okay. We've talked about paint, porcelain. There's also HPA. I want to talk about nanotech and what's happening with concrete. So let's start with HPA. What has advanced since we last spoke?
Yep. So HPA is something that we've been working on. We talked about it last time. It's something that I've been very familiar with for many years, but we wanted to find the right partner, the right approach that was the minimal risk for us to get involved with, because it's still a high risk area. We knew we had the best feed for it. We've done multiple pieces of work that's proven that we have the premium feed for HPA production. So we can get there in one stage of purification and get to a very high grade very quickly. So we looked around and we've ended up signing an agreement with a company called AEM, who are currently a Canadian producer of high purity alumina. They've got the only producing plant in the world. It is actually operational now. It's producing about 4 tons a month of 5N product, and it can produce HPA from kaolin. So that's very, very important, because this so far, no one else has achieved this in the world at a commercial scale. And this company, AEM, has gone through a lot of trials and tribulations to get there. They've made the mistakes, but they've actually worked out where they went wrong, and they've actually improved on those, and they now can do it. They know the way to do it properly and do it right. And also, what also convinced us was the fact that they have a UK subsidiary, and the UK subsidiary is going to build a plant in the UK to produce HPA, which is exactly the same as a plant that we would plan to actually build. It'll be the same design, same engineering, same components, same size, just a different feed. And the UK government is putting in $1 million immediately into funding that study at the moment. So we feel that we can also attract some very interesting funding, and we have the opportunity here to become the first commercial producer of HPA in our part of the world.
So let me be clear. So they're building one in the UK. You're not shipping anything to them. You're going to build it in Australia, but maybe use the same designs. Is that what you're saying?
Same design, yeah. So we can use the same engineering company, same design. They've got a design that uses off-the-shelf components, which is very important. It's going to be very low capex for an HPA plant, but it's potentially going to go straight to a 5N product, which is $50,000 per ton product. And using our feed, which we know is a best feed around for that process, then this will fast track us to become an HPA producer, and potentially it could use initially about 20,000 tons of our material from the Great White Project. That may have to be sent off to HPA So that's something that we're looking at for our DFS as well.
Okay, so is that a collaboration? Is there a formal agreement? Is it JV? Is there some sort of financial arrangement? What's it look like?
So at the moment, we signed an MOU where we have time to do our due diligence. So we're doing that right now. Our material is being tested through they've got a pilot plant which can make HPA to 5N standard and fully analyze it. So that's being done right now. We're doing our own due diligence. So we've got some very experienced metallurgists, 2 actually over in Canada, doing that right now to make sure that it all stacks up. And then within 30 days of signing it, which was actually 2 weeks ago, we're planning to move to a full agreement, a binding agreement, where we then move forward through the feasibility study. And then we're looking at finishing that next year, probably early next year, finishing the studies, and they're looking at potentially being operation by 2023.
Okay, what can you tell me about them in terms of, one, how long have they been around? What's their bank balance like? Are they public, private? What could a deal look like with them? And, what size of them, what portion of the market do they currently hold? And indeed, what is the size of the opportunity?
So at the moment, they've got a fairly small operation. It's only, they're producing 4 tons a day of 5N. They intend to ramp that up significantly. They're a private company. They took over a plant from a company previously known as Orbite, which went through all the teething problems with the production process, because it is a very complicated process. So they actually fell over Orbite, and AEM picked them up, and they've got the whole plant actually working again now, recommissioned it, and it's operational. So they've taken all that learning from those years, about 10 years of production, and they now have the model that they want to roll out around the rest of the world. So we have an agreement which will be exclusive for Australia. So we will have, and New Zealand. So we will have exclusivity to actually build plants in Australia or New Zealand at this stage.
So what does that mean in financial terms? I mean, what's the size of the opportunity for you? Is this just a distraction? Australian market is not very big. I mean, how do you make more of that relationship if you're going to go down that route?
Yeah, so you're right. The Australian market isn't that big, but the idea is that this will be the only one potentially initially in the Southern Hemisphere. So it will be supplying the Southern Hemisphere market, whereas the plant over in the UK will be supplying mainly the UK market. So the big market for this at the moment is Japan, Korea, those sort of countries that we're using growing amounts of HPA, and the forecast supply is going to be a big problem in the future if all the forecasts come true. So the demand is going to be growing hugely. So we plan to have a 2,000 ton a year plant initially. That's all with the initial plan, which will be scalable by modular design, so we can bolt on 1,000 tons at a time for minimal capex and expand that in step with the market demand. But that material will go around the world, and people who use HPA, battery manufacturers, they do want often dual supply or multiple supply points of the same grade material to de-risk what they're doing. So we can feed into those supply chains. Those same channels can use the same material from both plants.
Right. I'm trying to get a dollar number out of you about the size of the opportunity, whether the size of the market today, what you're hoping to do in terms of capturing market share, margin, because you can get very high margin products, but if it's small scale, it's small beer, and it's not going to do much for your bottom line, and or blue sky opportunity, which is the kind of growth component which shareholders want to buy into. So, how meaningful could the HPA element be to your business? That's what I'm trying to work out.
Yep. So good question. If it comes to fruition as it the potential looks on the surface, then it will be extremely significant, because we're only talking about 20,000 tons of our kaolin, but we convert that to 2,000 tons of high purity alumina at 50,000 US per ton. So you're talking about 100 million US. And the beauty of this is that the plant that we're going to be designing, the AEM model, is going to be the lowest, potentially the lowest OPEX plant of its type. Plus, we've got the best purity feed, so we can get there. For much lower OPEX than anyone else. And we're looking at around about $6,000 to $7,000 US a ton for OPEX, but a sale price of 50,000. So the numbers there. I mean, this could be bigger than anything else that the Great White Project does if it works as planned. Okay,
and so you'll let us know over the coming months when you work through an agreement with this small private company. You're a $400 million public company. How you divvy up the world? Who does what?
Exactly,
Who's
yes.
Northern Hemisphere, who's Southern Hemisphere, and more. You'll let us know.
There's going to be more exciting news coming out. I can't talk about that right now, but there's more exciting news behind this, which will explain all of that. We also, next stage, we'll be ramping up our testing work. So if it all goes to plan, we'll be sending over about 1/4 of a ton of our material, which will produce a large-scale batch that we can use for customer evaluations and approvals. And from that material, we'll get all of the OPEX and CAPEX numbers we need. So that's going to be a major step forward, and it's not far away.
Good. Okay, I'm excited about that one. I'll come back on and tell us about it. The other things I'm excited about is obviously concrete. From the get-go, your track record previously suggested you push this hard. How are you getting on the concrete side of the business?
It's going very well, yes. Concrete testing does take some time, so people think that there's not much progression there, but we have progressed greatly. Since we last spoke, I can't remember if we passed the concrete standards or not, but we've passed the Australian concrete standards for use. We've also filed a patent, which is very important. So we now have a patent filed because no one else has used this material before. It's important to note that this is a unique material being used in a unique way in concrete. Now, I've had experience before in concrete applications and cement type applications, but this is completely different. This is a product that works at a very low dose, but works right across the board, potentially in all concrete applications, allowing reductions in cost and performance improvements, and also reductions in carbon footprint, which is very important. So recent work we've got going, we've actually improved on our initial product. So we had an initial version 1 of we call it the Halloysite Rheology Modifier, HRM. Version 1 was good. It did give some nice improvements, but version 2 that we've been working on since then is a quantum leap up in improvement. So now we've got something that outperforms some very expensive current solutions, and we're talking about solutions here that cost $10,000 a ton. Our material outperforms those. And this material
in what way? Just again for people who need this story, what does it do that's better?
So when you say rheology modifier, it actually improves the way the concrete handles, flows, behaves. So when it's mixed and pumped and placed, there can be a lot of associated issues with things like segregation and bleeding. So water comes out, fines comes out, stones drop out. So this holds it all together, and that allows all sorts of improvements in the mix, so in the formulation. So you can actually reduce things like the cement, you can reduce the water, you can lower the carbon footprint, and you can use materials that normally can't be used. So materials that companies have that they like to use, they can't because they're inferior quality. But by using our material, you can incorporate all sorts of other additional materials, lower cost.
So there's some obvious benefits. They're being tested at the moment. It takes a while for that to get through because obviously, in terms of the use applications, some pretty serious ones. You want to make sure nothing's going to go wrong. So how long does that process take?
Well, we're quite advanced because we got these concrete standards. So we were doing that work a long time ago just to make sure we had that in place. That was a lot of testing, and we passed those standards. So now it can be used. It's just a case of getting a commercial agreement with a concrete company, and we're working through that right now. We're working with some potentially big players in the concrete sector. If they like what they see, then we can move to a commercial arrangement very quickly. And the beauty of this product is it's the material that we're using is very high halloysite, which we have a lot of that material, but it's actually not actual in our resource at the moment. It would be normally classified as waste because it's not suitable for ceramics and it's not suitable for paint, but it's absolutely perfect for concrete. So we got a whole new area of our resource. Previously was waste. Now suddenly becomes a potentially very high value resource because this material now can sell for more than the other products. And the even better thing is that it's very, very easy to process. You just take out some of the sand. That's all you do, and you have the final product. So
it's interesting. So you're going to find a partner. You've got to find. I mean, it doesn't seem very hard. There are not too many players out there in that space. Some big players. So they're going to need to test it. I know you've been testing, but they've got to go through the same process. So again, in terms of people trying to understand when that could be a revenue stream for you, what should we be thinking about? Is it
well, that testing is. Yeah, that testing is in progress. I mean, testing is in progress now, and now they go through. Normally, you need 28 days of strength testing.
Okay.
So you test it.
Not very long.
At regular intervals. Now, 3728. And it may go through a couple of iterations of that, but you're talking about that sort of amount of testing. Now, if it works, they could start to use it immediately after that. No, because it's past the standards that we put it through right up front, and it's used at a very low level. We're talking about using 1 kilo in 3 tons of concrete. So it actually, even if we sold it at a high price, say $1,000 a ton, it would still not add much cost to the actual concrete, but it will give these very nice benefits. And the material that we're testing now, version 2 material that we're testing now, that they are testing, even gives, it's showing a 20% increase in strength at that low level as well. And that's a benefit we weren't even planning on.
Okay, so it's a very short testing period. I thought they might have to lay it down, come back in a year's time and see if it's still holding up and hasn't degraded in some way.
No, because we pitched it as an admixture, it means it's going in at less than 1%. That means the approval can be very quick and very easy. So they could use it. If they're happy with it, they could use it immediately.
Fantastic. Okay, let's talk about, well, again, keeps up to date with that one. Nanotech, the nanotech applications. Put the word nano in front of anything, it sounds very exciting to investors. So, what's happening there?
That's right. So it is. It's a bit of a buzzword, nano. We're lucky though that we have this. Halloysite is a natural nano material. Now it's got this nano dimension. It's nano tube. So we're doing a lot of work to work out how we can utilize that shape, that structure, to actually get it into these new applications. So we ourselves and Minotaur, it's a joint venture for the Natural Nanotech company. We're pumping in $1 million a year into the research. So some significant funding there, and we're making great strides forward in a number of areas. The leading area is probably carbon capture, which is a bit of a hot topic at the moment, thanks to Elon Musk. So we have a pilot plant that is under construction, and this pilot plant is going to be set up so 1 ton of our halloysite matrix material can actually absorb and suck in about 1.4 tons of CO2. But the good thing about our plant is this pilot plant, you can then discharge that and convert it to a methanol clean fuel, and then and keep repeating that. So that 1 ton of halloysite matrix can keep sucking in tons and tons and tons of CO2 and convert it to a fuel. So that is going very well. Once we've got operational, then we can prove that up to anyone who's interested in that space, anyone who wants to reduce their carbon footprint, anybody who wants to close the loop and turn their CO2 into a clean fuel, then we'll have the ability to do that. So that's going forward very quickly. We're also getting very close to filing patents in the battery technology sector. So we can use our halloysite to manufacture carbon nanostructures very cheaply. So very cost-effective manufacturing of carbon nanostructures, which when they put into batteries, they can improve the performance of batteries and the discharge rate by about 5 to 6 times. So that patent is ready to be filed, and also a patent for water purification.
Is this the thing you're working on with, I can't remember, Newcastle University? Is that the same thing?
Correct, yeah. So they have a global, yeah.
So how do these guys move this thing forward? Because it's more than just topical. It's a huge market, and it's only going to get bigger and bigger and bigger. We're involved with a couple ourselves, investing in them in this area. So how do you how do you speed things up there? I mean, carbon capture, crikey, that's got to be bigger than the rest of your company if you get it right.
Well, you're right. It could well be, and I know we've got some big things happening anyway. But you're right. So our plan is, that's why we're putting this money into this pilot plant. That's the key to, because then we can demonstrate. It's a demonstration plant that sucks in huge amounts of CO2, and it shows exactly what can be done. And it's a scalable plant. This can be made at any size. There's some good IP around that we'll be capturing as well. So as soon as that's operating, we'll get anyone customers, clients, any other companies that are interested to come in and see how it works. Then that plant, one of those could be put in there wherever their application may be for it. Like a cement company, for example, it could be put out a cement plant, and the CO2 outflow could be put through this, converted to a fuel, which goes back into the plant and powers the kiln. So that's a very important part of it, is getting this pilot plant operating and demonstrating it. So that's why I think that's going to go first. Now the patents for the battery, well, we have to scale that up. It's working in small batteries, but we have to scale it up. That'll take a bit longer. And the water purification. But we also have some good progress we're making in the hydrogen space as well. So the same structures, the halloysite structures, And I should probably emphasize here that we're using halloysite from our Great White deposit for this. We're not using any halloysite we can't manufacture. We know we can manufacture this because we have areas of high purity halloysite already in our resource, and it's working in these applications. So that's working in, and also we've just got funding for $2.4 million from the government for agricultural applications of halloysite. This is for slow release of herbicides and fertilizers, and also they're working on the release of cancer drugs for humans, and also antiviral, antibacterial drug delivery, and also remediation. So there's a lot of projects going on there, and it's all working with our current halloysite material.
Right. So nanotech, a lot of research, a lot of money. Most of it won't work. Some of it will have commercial applications, just the nature of it. So there's a long, slow line of potential future revenue, hopefully, right? But can I just talk about the carbon capture thing, because it's the nearest. So the pilot plant you're spending how much on? Are you getting grants for that? I mean, how do you move that thing forward? Surely that's exciting for the Australian government too.
It is. So the bulk of our $1 million that we're putting into this research institute is going towards that pilot plant. We've got several grant applications in at the moment that will more than match fund that. So we are anticipating getting in several $1 million of funding on top of that, based on what we're contributing. And we've had to be a bit careful because there's a lot of IP around this plant. I think it's going to be a pretty hot topic. People would love to copy it. So we're being quite careful that we roll it out safely, so we don't publicize too much information too soon. But we're looking at 3 to 4 months before that's in and working properly, which isn't that far away now. And then our next thing that we have to do is we have to make a few tons of the halloysite material to go in there. So that's the next thing we have to do. Our pilot plant in South Australia, we've just bought a new piece of equipment that's going to help towards that. In fact, it came from the UK. So a very large centrifuge that's being installed at the moment. That'll allow us to make potentially ton amounts of high purity halloysite, which we can feed into this project.
Okay, James, I'm just kind of conscious of time here. I could talk to you about the nanotech side of things for hours. I really could. So I think it's very exciting. But in terms of near-term opportunity, in terms of shareholder value creation, that's the old cliche, isn't it?
Yeah.
What should we be looking out for the rest of this year, the next 6 months? What do they look like for you?
So next 6 months, we're going to lock up the rest of our first 2 years output from the Great White plant with binding offtakes. So about 30,000 tons left to lock up. We'll do that around the world, so we'll de-risk the project further. That'll give us, so that means we'll be totally sold out for the first 2 years. We'll finish our definitive feasibility study, which will give us new numbers for that based on the paint product being incorporated. And potentially we may incorporate direct shipping oil I mentioned. That may be incorporated, and we may incorporate this concrete product if that comes through quickly. And potentially even the HPA if that moves quickly enough. We're not sure about that. That might be a little bit longer term. That's coming through, and the mining approvals are in progress. We put a mining approval application in February. So it's gone out for public submission. Those submissions have been received by the government. They're just now working through those. So next stage is to put in our environmental plan for the mine. So before the end of the year, we expect to have our mining approvals done, our DFS done, and all the binding offtakes locked in. So that's some pretty exciting things happening.